Hey, how are you guys? Okay, so I was asked to make a volume profile backtest. So I want to basically start. So I'm going to be working from the right of the screen. Right. Okay. So working from the right of the screen. So basically, when we put volume profile, we notice there is that. So I'm gonna be going around putting what you call this. I'm going to be putting horizontal lines wherever I'll be placing trades. So there's a horizontal line has been placed. So that is where I'll be trading. So as price is moving, price is moving, price is moving, I see this price rejection over there. I would like that, and I would go, definitely I'll go there and I will trade that rejection over there. So I'll just want to place another horizontal line right there, and then these two I'm going to ignore this. Okay, price comes there, it comes close there. So let's just open our magnifier. Right, when we look, the price comes close, it really doesn't touch this zone, it doesn't touch that zone, it gets close to it, but by how many pips? Just close to about 3 pips. So because of that, I will be deleting this because it would have been tested. So however, we see that that is a consolidation, sideway movement of price. So I'm going to take that and I'm going to trade this once again. Not just only that, but you notice that this candle, this low is actually by that price, and price actually obeyed several times that price level. So I'm going to be trading that, and then as price moves, you notice that it comes again to our entry point. Once again, it comes again to our entry point, close near, it nearly touches our entry point. So hence, therefore, I will be deleting that one. Right. Okay, so we continue to move. Price comes there, it hits that. Okay, let's see how many pips it goes down by. It hits that, it goes down by, goes to 6 pips thereabout, and then it goes up by 15 pips. So it's depending with your take profit or stop loss, but most probably this trade would have closed in a profit. Right, they've closed in a profit if you're trading with 15 pips stop loss, about 8 pips stop loss, 8 pips stop loss, 15 pips, about 10 pips stop loss, and with the 20 pips take profit, with the 15 pips trading stop, you would have hit profit there. Right. Okay, so also this one, some will say, okay, why don't we take this one? If you look at this looks like some form of I forgot what it's called, liquidation. It's double bottom, where we've got these almost equal size candlesticks, where those are not good size trading sides. Okay, but then when we look at this one, we notice that there we've got a gap, right? So which means that the rapid movement, if the market does like a strong rejection, price went up, and then there's like a strong rejection of price at that point. So that might be a very good trading point. Now, since this one would have activated, let's just place another line up there. Place a line there, price is moving, we come there, we get this consolidation, we'll ignore that one, we come to this rejection, right? We want this rejection there. That rejection is not generating anything, but we notice that this one is quite big. Notice that this bar is quite big, so we will be setting it at this particular level. Right, we'll be setting our bar at that particular level. Price is moving to the left, price is moving to the left. These two candles, you might think that they're rejection, but they're almost the same size, so we totally ignore those. Price is moving, price is moving, price there touches there, active. You see this bullish candle touches there, activates. and then price just drops. By what value does it drop by? Let's just go and view, or Control F. Okay, across here is Control F, so let's just use that. Perfect. It drops down by 15 pips. Yeah, you know, as we said there, when 15 pips your trading stop is activated. So yeah, you would have made a profit in this candle there also as well, and there won't be any trading signs. Okay, when price gets here, this sideway movement, because of this high, we are going to look for trading signals in that particular region, right? Okay, so how many trades we would have entered 2 trades right now, and both of them are in profit. So here we want to set our price there, right? Where price activates, the price goes up. Here we hit stop loss. So we've got 1 profit, 1 losing trade, 1 profit, 1 losing trade. Here we'll not look for any signals here. We'll not look for any signals here, because after past there is no resistance, even though there is some action there, but it's kind of weak. If you look at the course, you'll understand why we don't take that one. And then this sideway movement, we're gonna take it from there to there. We're gonna ignore this first part. We're gonna look at it from the second part. After that, bullish there, we see price set over there, right? We go back to our Control F. You see it would have entered there, price would have gone up by 7 pips and then come down. We would have yet take profit. So we've got 3 winning trades, 1 losing trade. Okay, so we come down there, we would have most probably looked for a position there, but there is no sideway movement. Price is more moving up. Yeah, we might look for a trading position here, right? There. So let's just place that. We've got 3 winning trades, 1 losing trade. Price comes, does nothing. Okay, price comes down there. We created it there. Price comes down there. Let's look at Control F. Price would have entered in there, come down by nearly 10 pips. So stop loss would have been hit. Then it would have gone to stop loss would have been hit there. Yeah, stop loss would have been hit. So we've got 3 profit trades, 2 losing trades. Right, there comes, now look at this. We've got this action here, then price breaks down. So this is actually a good signal areas. So we're going to be looking for signals there. Right, okay, sorry about that. So here we actually have got a price limit there because of these lows. Also we're gonna have one there, right? Okay, then price continues to move. We've got this nice rejection there, so we're going to look for some trading opportunities by that rejection. So I'm gonna hold control, I'm gonna click there, and I'm gonna drag that one down there. We're gonna look for another trading signal there. We had 3 wins, 2 losses, and then price comes up, gets there, Control F. Price gets there, it goes up by 15 pips and then comes down by 15 pips as well, and then it continues to go down, right? So that is one of the trading signals. So here okay, there we would have lost it, no talking about it. And then we come again in this same place where we lost. That is a very good rejection in the lower time frame. in the lower time frame, that's a very good rejection area there. So most probably I'm gonna set up a new trade level there. Price comes down, you set up in there. You notice that when the opening opens, the price opened in a new week lower than that level, right? So we would have not have traded that because we close all our trades for the new week. That's why we place trades upon opening of the market. So when the market opened, it was a great lower than our entry price, so then we wouldn't have traded this one, right? So we delete that, we move. Notice that there's this arc there, so we're just going to look at that arc, and then we're going to take this price level, set it there, right? Okay, and we move with the price. We move with the price with 3 wins, 2 losses. 3 wins, 2 losses. We started off on the 1st of May. When we come over in this particular region, when we look into this region, now there are not any trade signals whatsoever. However, some might say this rejection, no, I won't trade it. Why? Because those 2 candles are almost the same size, right? Okay, come over there, there's this arc. Now I wouldn't pick it up. Ma. Okay, but it's actually quite interesting because it actually gets a few trades in. Does it go by 20 pips down? Oh well, it actually goes down to it, I'll take profit. Okay, so I myself wouldn't have traded this one. So this is one trade I wouldn't have taken, but well, it ended in profit. And then by this rejection at the bottom there, I would definitely be looking for a trade there. So I'll take that and just bring it at the bottom, right? Okay, so we continue to move up, up, up. Now we get the price, we hit a stop loss, so we're now on 3 losses, or down 3 profits, 3 losses. However, we come again. Okay, this I wouldn't trade because it makes a lot of, I don't like this sideway movement of the price. I don't like the sideway movement of the price, but others would have actually definitely traded that, but I wouldn't. Right? Okay. Others would love to trade this because of that price over there. When we move to the back, does it have anything? No, it doesn't. Okay, so yep, I wouldn't have traded this one, so let me just change it into another color. Properties, I wouldn't have traded that, so I'm gonna set it up to lime green. The lime green is things I wouldn't have traded, but other people would trade. So blue is what I'll trade. So I'm now on 3 losses. So gets there, hits that profit in, and we're now in 4 profits, right? 4 profits, 3 losses, and others. This would definitely be a loss for you. And we come down. I wouldn't trade this downward movement, right? I wouldn't trade that downward movement. However, looking at it, it gives us a D shape, right? D shape. We trade at the top and we trade at the bottom. So which means that other people would most probably be taking trades. Okay, let me just delete this. At the top there, is that a rejection? Okay, at the top there, price is like rejected, so I will be totally be looking for a trading position there. I'll be totally looking for a trading position, but I don't like how close it is to my other price. So price comes down, then bounces back up again. not trading positions for me here whatsoever. So I continue moving, move. There's this rejection, like price gets there, price opened there, price went up and came down and closed below. So this is a form of a rejection. So I will be looking for a setup right there. So most probably might be entering into a risk trade there, right? The price moves, this price comes close here, nearly tests it. Let me just check what it is. Go F. How many pips is that? 3 pips. Okay, so price comes in, it hits that, price goes up. It will be 5 trades in profit, this one again in profit, 5 trades in profit, 3 in loss. Notice I have some okay, I've lost track where I created this one, so let me just delete it. I'll be 5 trades in profit, 3 in loss by this particular day. And there's this sideways movement where most probably I trade that. I trade that based on the history. I won't trade that because of this consolidation. I won't trade this level. I won't trade that, even though there it was a good entry and close. I myself wouldn't trade it, but well, others would risk it and trade it, and they will be in profit. Open 6, up on 5. Now price moves up, price comes there, hits that, hits my stop loss, We're now on 5 each. Now 5 trades each on loss and wins, and we come there, we get there. Let me just delete this. Trades, delete that, Hope is to an entry position there. Price moves and voila, 6 profit, sniper entry, 6 profit, 3 loss. This sideways movement, let's see from the past whether we've got anything interesting. The past price level there is too high. I wouldn't trade this. Even though from the following one there's profit there, right? Price moves up. Wow, this is the candle is almost the same size. I wouldn't trade this. Continue moving. Price goes up. Okay, this one would have beat profit. Price goes up, right? There are other factors which determine whether you trade or you don't trade. These are things such as like your news, right? So we are not yet here we're just looking at the volume profile without considering other factors which govern our taking trades or not taking trades, right? Price moves here, there are no only trades. This would have been loss, so it's 6 profit, 6 loss. This nice sideways movement, this is a nice side movement. This, just look for something there. Let me just take this and going to place it over there, right? I like that, so I'm just gonna make it into a decline, to say that yeah, this is the deal. And most probably it's activated there. It's gonna be activated. No, but why trick is they could I would have said that it activated there, or maybe just placed it there. Price goes down and eventually price is gonna come up. Price bounces off it there. See these 2 bounces of the price there? That would have made me not trade that at all. These 2 levels, the price comes close to it. I would have cancelled this order so fast. because you got two candlesticks coming near to it and not activating the trade. I don't trade that whatsoever. Don't do that. Right, okay, we continue moving with the price. Okay, we've got this rejection at the bottom there. Right, we've got that rejection, so we're gonna place a buy there. Right, so we're on 6 profit, 6 loss. This one is for what? This one we created at the back thing. Right, okay. We move with our price, we move with our price. There, I don't see any trading signals. Okay, we get there, we've got that nice sideways movement, breaks down into the sell, come, place it right on top there. Right, price moves, price comes, nearly tests that level, but do we close it or do we don't close it? Let's just check. About 5 pips. It depends. Other people will close it, but other people will leave it open. I myself will close it because it's just too close for to my level. I don't like it. And from there onwards, we just come. No more trading signals. Right here, the reason why I came and put there is because of this low there and this high, and you notice that it also obeyed those candles, obeyed that level. So this trend downwards, I would have traded it there. This would have given me 7 profit trades, 6 losses. We continue moving. Continue moving. This rejection, will I trade this rejection which gave me a trade? No, I won't trade this. So it gave me a trade. This sideways movement. This sideways movement, notice that we've got a break in the candles there. This is the same hour, so which means there's heavy action over there. Let's just see how the price behaves there, and the price indeed is within that same gap. So I would really consider, okay, I will really consider this trade level. Right, price comes, it activates 8 trades in profit, 8 trades in profit, 8 trades in profit, and 1 in loss. I wouldn't consider this one. It is too close to this level. It's too close to that level, so I wouldn't consider it at all. So price continues to move. Price is moving. Price gets there, hits our stop loss, comes there, hits our level. As we are breaking here our level, we come down. There are no any trades whatsoever in this region. Okay, there. Maybe I might consider putting a trade in this place. Price comes, bullish trend, comes up. Price comes, price there. What does that do? Anyway, why am I looking at that? I won't trade that. There is no consolidation whatsoever. I won't trade this. I would have traded the trade there. I've got 8 profits, 1 loss. Price comes, price activates there. It hits that, comes down. Price hits that, comes down by 5 pips, and then goes to its stop loss over 8 profit, 8 loss. Price with that goes with stop loss, comes back, it retests that. So there's another method where if a level fails, there's a chance it becomes a support and resistance. So if you look at this uptrend, look at that uptrend, you notice that we've got a level there, white line there, right? So what does the white line represent? Let me just show you. It's a yellow line, it's the mode line. So mode is like the number, it's one of your key levels. So we see the yellow line there. So there's a chance that I would have traded this on the return, so hence giving me 9 profit trades to 8 loss. I would have also set another. Okay, this candle is almost the same size, so I wouldn't have actually considered it. I wouldn't consider that one as well. Would have 9 profit trades, nothing here. That one profit. So I'm gonna keep this blue line such that we can use it to create more blue lines. Right. In which month? No, we're now in June. So for the month of May, we would have had 9 trades, 9 profit, 8 loss. Right, and based on our risk to reward, we'll be in profit in general. Right, we'll have been in profit for our month of May. And as price continues to move, we come there. If this rejection price comes, then it shoots up. Right there. Take this, we place it over there. Okay, so now don't forget we're keeping, let's just delete it. Okay, price comes. Okay, I said that I won't trade that, but let's see if we have traded it. Yeah. Just as I thought. I would have traded it in the loss. Right, and then we continue moving to the left. We see this nice consolidation there. Nice consolidation, shoot up, price breaks down. So it's a too long consolidation. I would have placed it, but I would have watched it carefully before I traded it. Price comes, price reacts to it. Right, so let's just do this. Okay, sorry about the quiet. I was just trying to see my calendar there. Okay, there's a rejection somewhere here. That rejection. I would have simply analyzed that rejection there. Okay, now you see here we're testing this level, so because of that we're going to delete that level and move with the price. Okay, you see this one, others would have traded this level, which gives them 10 profit 8 loss. Right, 10 profit 8 loss. Continue to come down. Right, notice that this whole action there, this whole action with that consolidation, they've given us that one 11 profit 8 loss. 11 profit 8 loss. Right, come the sideways movement gives us that trade over there. This is now 12 profit 8 loss. Right, okay, we come, okay, sorry about that. We come, we've got this rejection which would have taken a trade in. Do we place another trade based on it? No, we don't. It becomes weaker the more you trade it. Okay, we come there, we see there, we enter, we see that we Nice on there. You would have placed the trade to that one, gone there, loss, 12 profit, 9 loss. This sideways movement, it's come there, it's tested, not traded. It was still at still at 12 profit, 9 loss. Comes there, enters, goes up by about 18 pips, comes down. So on 9 loss, 10 loss, 12 profit. Right, comes, we've got this nice sideways movement over there, build up. So some might say that they're actually building up from here, but it's tested in these candles so well to have been deleted. Then after that, we've got nice price continues moving up, nice move up price. We've got market rejection there, but that market rejection over there, set up that market rejection, price came, go F, price came, price went up 17. But on this market rejection, someone will say take profit on these candles, on these highs there, right? So here without taking profit, taking profit 12 loss, taking profit 10 loss, come down there, set profit there, right? We're following this line at the bottom. Okay, come down like this movement here, but well, we didn't analyze it. If you analyze it, the break to the uptrend, if you're analyzing the lower time frame, we would have taken this trade here, giving us 14 profit, 14 profit, 11 loss, 14 profit, 10 loss. And we come there, we analyze that, comes there, it's nearly tested there, therefore we delete that, comes it activates there, woo, sniper entry, activates, then goes up by over 20 pips. So we're now on 14 profit, 10 loss, 15 profit, 15 profit, 10 loss. Would have come, yeah, right, this whole movement there, this one would have okay, would have traded because it's tested. You can see it's tested, then deleting the trade level, come, and this market rejection there, we want to get that, get it nice, just like this. Okay, price comes down, breaks this sideways movement on lower time frames would have activated. They're still giving us 15 profit, 11 loss. You can see it, 15 profit, sniper enter again, 15 profit, 11 loss. This sideways movement also is another interesting one. For the sideways movement breaks down to a downtrend trend, we come there, we've got this sideways movement which breaks to an upward trend. Right, okay. Sideways movement breaks up to an upward trend. There's that level there. Comes tested there, it's deleting it. So this is not deleted, it won't be there because it's tested there. Even though if it was a bit higher, just by half a pip, it would have made wonderful profits. But we can't count it, but still on 15 profits, 11 loss. Notice that this one also, this okay, it's tested, they wouldn't have activated. Price comes, still in tune. But well, you get what I'm talking about. In 2 months we have 15 profit trades and 11 loss trades, so that's not that quite bad. there is another one. Okay, price opened at the top there. This gap, we would have quickly deleted this before it moved any further. So that's one of the things. Let's just look at these two trades and then we just call it quits. Comes there, hits that loss, comes there, hits that loss. So let's just take them as two losses. So 15 trades, 18 loss, 15 profit, 18 loss. But the amount, our risk to reward ratio is quite good. So yeah. So if you are those people who compound and build on your trades, that would be a good start. Gents, please do take care. This is a volume profile. We're just looking at some of our signals which some people might take just through the month of May and part of June up to mid-June. Right, so that's like movement. Cycling movement will follow with the price come back down there. How price does come down there in our level pattern at the bottom. That's when it's actually traded. Price, okay, doesn't actually reach it. But I like volume profile, like look at these levels right there. Just zoom in. These levels, see how price reacts to them later on. So that's the advantages of volume profile. Price comes, activates it. So yeah, cheers.